Every year, millions of people unknowingly hand over thousands of extra dollars to the government. Not because they're honest, not because they're responsible, but because they simply don't know what they're allowed to keep. The wealthy? They play by the same rules but with very different moves. There's a little-known strategy that's been quietly used for years, one that doesn't require a high income, a fancy accountant, or risky loopholes. And if you use it, it could keep $5,000 to $20,000 or more in your pocket every year. Most people believe taxes are non-negotiable. You earn, you pay, end of story. And those exits are designed not for the average person, but for investors, creators, and business owners. Because the government doesn't reward labor. It rewards leverage. Here's how it works. When you work a 9 to 5, you get taxed before you even touch your money. That's called active income, and it's taxed the hardest, sometimes over 30–40%. But when you own a business or even a side hustle, deduct expenses before paying taxes, write off equipment, software, even part of your rent, even invest in assets that generate income and reduce taxes at the same time. Suddenly, instead of being taxed first, and that simple shift can mean thousands back in your hands. The hidden strategy: become a business, not just an employee. You don't need to run a huge company to benefit. If you have a side hustle, YouTube channel, digital products, freelance work, online store, you can qualify as a business. And that unlocks a world of strategic advantages: home office deductions, phone and internet expenses, courses and coaching. Yes, those two work-related travel. You're not cheating the system. Real-world example: the $8,000 return. Let's say you earn $60,000 a year and pay roughly $12,000 in taxes. Now, let's say you start a digital side hustle. You earn just $500 per month from it. Not life-changing, but here's where it gets interesting. $1,200 for software, $1,000 for a new laptop, $1,800 for home office use, $500 in advertising, $400 for education or coaching, $600 in phone, internet expenses, $1,000 in travel to a business conference. That's $6,500 plus in legitimate deductions. Taxed at 30%? That's almost $2,000 saved just for doing what you were already doing. Scale the business, scale the deductions. Keep growing, keep saving. Because accountants won't tell you unless you ask. And because the system is designed for the informed, not the obedient. The rich aren't smarter. One where they keep more, build faster, and multiply what they save. Take the first step: start a business on paper. Even if your side hustle makes $0 right now, you can still structure it properly. Register as an LLC or sole proprietorship, cheap and fast. Open a business bank account. Work with a tax pro who knows online business deductions. This isn't theory, it's how real wealth is built quietly behind the scenes. And in 2025, with more digital entrepreneurs than ever, there's never been a better time to take advantage of it. And the government isn't going to tell you how to pay less. You don't need to earn more to save more. You don't need to be rich to keep what's yours. You just need to play the game with your eyes open. The secret to building wealth isn't earning more. So the next time someone tells you to save money, ask them, are you saving, or are you being silently overcharged? Because with this one shift, you could keep thousands more every year, and that's money you can use to build your empire. If this helped you see money differently, don't forget to like and subscribe.